Ladies and gentlemen, after many years of rapid growth with limited legal clarity, 2025 marks a turning point. Many governments worldwide are now developing legal frameworks for digital assets, from EU MiCA to policies in the US, Hong Kong, Singapore, and Vietnam. We are witnessing a global regulatory race where clarity leads innovation. Ladies and gentlemen, now let's join us in the panel discussion with the topic 2025, the year regulatory frameworks reshape the digital asset landscape. And now let's join us in welcoming on the stage our distinguished panelists. Let's welcome on the stage Mr. Offwin Andiko, APAC Sales and Business Development of BitGo. Let's welcome on the stage Mr. Eddie Roger Travia, CEO of Consilium Group Limited. Let's welcome Mr. Michael Chin, Business Development Manager of Hashkey Group. And let's welcome our moderator. And now let's begin our panel discussion.
Hi guys, happy to be here for the second time in GM Vietnam. I'm Elwin, leading up sales and BD in a few emerging markets, Vietnam being one of them. So not sure if you guys know BitGo, we are the largest independent custodian. We have around 100 billion worth of crypto assets with us, and of course 50 billion being staked. So we're often seen as being an OG of the custody world. So some of our clienteles are like treasury companies, exchanges, VCs, family office, and even sovereign funds.
Hi everybody, my name is Eddie Travia. I'm the CEO and co-founder of Consilium. It's a company we founded in 2014 and listed in stock exchange in London since December 2015. Initially, we started investing in blockchain companies around the world. We have also done a bit of advisory work as well. We helped a lot of companies raise funds throughout the years. And more recently, we have established a subsidiary in Gibraltar that holds Bitcoin, and we are as well now we have an activity of a Bitcoin treasury, and our shares are listed both in London and New York at this time, and it's the first time for me in Vietnam.
Okay, so hello guys, I'm Michael from Hashkey. So Hashkey, which is one of the, I'm focusing on the Hashkey exchange side. So we're serving for the crypto trading business. So for me, it's from the Hong Kong headquarters. So besides in Hong Kong, we got the license on the exchange. We also have the global presence in Dubai, Japan, Tokyo, and then also Singapore. And in the future, we are also applying the license in MiCAs. So from my focus is actually the institution business development in between the Hong Kong exchange and also some of the institutions who invest in crypto in Hong Kong. But besides that, as the Hashkey Group, besides we have an crypto exchange, we also have different infrastructure. Say for example, the Hashkey Change and also the Hashkey Cloud and also the tokenization team. So basically, just in short, we provide like an all-round Web3 services for all the audience and also the institutions all around the world.
Yeah, awesome. Yeah, once again, really glad to have you guys here with me today. So I would like to start with an overview questions. So as we mentioned, like we have MiCA in the EU, we have the Hong Kong licensing regulatory framework, and we also have the different stance in the US as well. Like, and from your point of view, which reason is having the most balanced approach to also to support the industry and also to protect investors as well? I would like to start with Michael first.
Yeah, sure. So first of all, I'm not being biased, but for me personally, I think Hong Kong get actually quite balancing development between the regulatory and also the business development. So first of all, of course, Hong Kong is not the first one, but not the last one to have like a full regulated licensing scheme on how to do the crypto tradings. But why is it, from my perspective, is actually better than other jurisdictions is that we actually have a different focus in different phases. So I would say it can divide into three phases. First of all, in the very early stage, we are focusing on the regulatories. So we actually spend more time and also more decent effort to outline all the regulations on how to actually run the crypto business in Hong Kong. So say, for example, we spend a lot of time how to decide the architecture on the custodies. And also whether we need to get the insurance, is what's the percentage of the insurance to cover the custody in order to have the client asset protections. So first phases, we build a very strong fundamental client asset protection scheme in order to moving out to the next 2 phases. After the first one, the second one will be the mass market adoptions on the crypto tradings. As you all know, like this quite often, like the traditional financial market in Hong Kong, everyone actually trading different kind of asset class. But based on the fundamental we have built up in the first phases, all the retail client have the confidence level to actually try to invest in cryptos. So we actually are moving very fast to the second phase. And after that, in 2025, especially in Hong Kong, all the institution, the regulated brokerage, and also the security house, as they see the need from the retail client, they are actually trying to collaborate with the Web3 company for tokenization projects or with the exchange for crypto tradings. So based on that, as you can see, we start actually not the fast one. I can say it actually starts slow in order to build a strong fundamental. But based on that, we actually moving very quickly on the second phase, how to do the mass adoptions and also the collaboration, building the bridge within with the institutional participant on the crypto trading side.
Got it, very insightful. And how about Eddie? How do you feel about the regulation?
First of all, I would like to say that as soon as we started helping entrepreneurs back in the early days, so we're talking about 2014, 15, 16, the first thing that came out was that regulations, of course, was a key element of being able to basically provide services, right? So I think what regulators have been, I mean, we have seen different approaches. We have seen, for example, we set up companies in Gibraltar early on. Gibraltar has a DLT license, and other, different countries have tried, experimented with different regulatory frameworks. I think what is very important to keep in mind is that in crypto, entrepreneurs actually impose themselves, kind of self-impose regulatory guidelines that are actually quite strict. People may think this is a wild, wild west, as we heard before, right? But in reality, crypto entrepreneurs, especially exchanges and anyone to do with assets, and custody, etc., they have always been actually extremely careful, and they have maybe even applied stricter rules than traditional finance to start with. So I think what regulators have to understand is they need clarity to be able to build these ventures. And so for any country, for example, of course, the country where we are in now, Vietnam, they need to make sure that it's clear that there are some clarity in regulation so that you help build the local and even international ventures to come and build in the country. And I think that's very important for the development of the industry overall.
How about you, sir?
Yeah, so BitGo, we come from a place where we have lands across the different regions, right? So for starters, we are based in the US. So we have a NYDFS trust charter in New York. And then after that, we got BaFin license in Germany, VARA in Dubai, similar to HashKey. And last year, we also had the MPI license in Singapore. So there are many efforts from BitGo to be regulated across the different jurisdictions. And for some places where, we have a large market share, the governments, the regulators actually come to us and also tell us, if you're open to applying, yeah, please come to our country as well. So hopefully the case, like what Eddie mentioned, right? Regulatory clarity is one of the most important factors that we look at. And for example, in Singapore, right, they regulated custody and trading with a clear regulatory guide. So that's when, we told ourselves, like, yeah, it's a huge market. We should get regulated there. And I think it took us around 3 years to get the MPI license.
All right, yeah. And follow up with that. So I would like to follow up with questions about the tokenizations, which is one of the itchy issues when it comes to crypto regulation. So this is for Arwin, because I know Consilium is a public listed company. So do you think the current security and utility framework is outdated? And if yes, so should we adopt a new and purposely build for a new type of like tokenization framework?
I mean, in the world of securities, obviously we see a gap between, let's say, crypto trading, for example, crypto asset trading and securities trading. I mean, everybody knows that crypto trading is 24/7, for example, which is a very simple gap, but it has some repercussions, I think, in the fact that you can do so much, right, by trading 24/7. I think yes, but to be honest, I have the feeling that the whole traditional finance security sector, probably even without the crypto space, is probably at the right time for a little bit of a, restoration, or maybe a bit of more innovative mindset in the whole sector. And also, I think it should be driven by market demand, right? Because at the end of the day, for example, when we did only this year in May, we announced it in January, but only this year in May, Consilium really explained to the market, okay, now we have a Bitcoin treasury subsidiary in Gibraltar, and we're going to raise funds for that. And actually, we saw a surge, really a peak in volume and liquidity. And I think volume and liquidity is super important for any asset. I mean, of course, crypto or shares, right? So I think anything that drives liquidity and demand for your shares is going to be beneficial for everyone, beneficial for traders, beneficial for companies, for issuers of shares. So I think there is a need for, I don't know if there is a need for a completely new regulatory environment, because obviously there are already many rules that govern shares and security issuers. But there is a need for this infrastructure to take into account the fact that you can indeed trade more often, and you can trade maybe as well more globally, right? Because all the stock markets today are very geographically focused. And obviously there is demand for not only 24/7 trading, but also global trading.
I see. And Michael, how do you view about this? Because Husky's also had the tokenization service, and it's your domain as well, right?
Yeah, so, like these days, many people talking about the utility token and also the security tokens. So we always, like in different jurisdictions, we always want to actually predefine, to bring out like a framework, the definition, whether this token should go into which categories. But instead of we actually have the outline, I think it's better for us to evaluate each token case by case in the activity basis. So whether the utilities and also the functions and also which geographic segment related to the tokens, we evaluate based on that, rather than just like come up a framework and then some of the tokenized token issuer will just want to identify themselves as security tokens or utility tokens and draft out the white paper based on that. It's actually like confusing, or like, it's an illusion for the investors to invest in particular tokens. So what I think is actually based on the activities and then to define, rather than just come up with a framework to identify themselves.
I see, thank you. And this is for Alvin. So practically speaking, like follow up with that, like how can project founders can design economies that also like remain compliant but still provide a long-term benefit for their economies and project?
Yeah, I think I would like to go back to the previous point on tokenization, because it's quite linked, right? So everyone can tokenize a project, a fund, right? It's just putting it on a blockchain. So what's the most difficult part about what makes a tokenized product good? Is actually you need to dive into the legal aspects of it. So what we have seen is a lot of companies, they set up funds like SPVs in offshore islands, but then they get a regulated fund manager, maybe in tier 1 cities like Hong Kong or Singapore, and then they tokenize it. And then they would ask, like, if they want to list on exchange or someplace that we support, they would ask BitGo to sort of support their tokenized token, right? And one thing that I want to say is, in Singapore, they regulate security tokens to a point where if you want to tokenize an object, you need to have a CMS license, right? Capital Market Service License. So for projects that want BitGo to support, we actually need to list their project on our US entity, right? Not the Singapore one.
Nice, that's very nice. And follow up with that as well,
yeah.
like because we already have a lot of like judicial sandbox. For example, in Vietnam, so
Yeah.
we are also having the sandbox. But how do we preventing this from becoming a loophole for manipulation and also like insider trading? Because like in TradeFi, there's a lot of cases like in insider trading. So when it comes to like on-chain economies, how do we prevent that as well?
Yeah, I think for insider trading, right, you need to have a few players, especially all the infrastructure players need to get together first, right? For example, the custody, the AML and CFT risk involved, right? So very often custody and also service providers like Chain Analysis, Elliptic, so these are the ones that actually do all the on-chain screening, right? So if there's any bad actors involved, crypto is all on-chain, so you can actually track. And for our side, we would work with regulated entities, including regulators and the governments, to show them reports. So anyone, like let's say, I don't know, Michael, he's the ops guy in the company, or Eddie. Yeah, if he does something like withdraw funds or approve funds out of the system, yeah, we would track that. So that's one way of like eliminating sort of bad actors within the company itself.
That's nice, that's nice. And like follow up with other regulator, we also come with the taxations. But that's also a great space, especially when it comes to like decentralized and peer-to-peer environment. So Eddie, from your point of view, like what would a fair and enforceable crypto tax policy gonna look like? Because there's a lot of like different experiment around like other country to approach that problem.
Yeah, you're right. I think actually taxation is extremely important. I mean, we've seen in some parts of the world, for example, Japan, it's possible that people are also attracted. That's another reason why they may be attracted to shares like Bitcoin Treasury Company shares, because it's less tax than the value than the profit that you can make on crypto, right? So I think it's very important for the government bodies that look at taxation, that they realize they don't need to maybe give an advantage, a clear advantage to such and such asset, but make sure that, profit from crypto assets shouldn't be necessarily higher than profit from shares, because at the end of the day, it's just another type of investment, right? So I think it should be fair and make sure that people can, if they make money on crypto, they should be able to enjoy it as well, maybe not take out too much, right? Of course, you need a level of taxation because it should be in line with any other assets. So I think tax authorities from different countries could make it quite simple, align it with other existing assets. And I guess, because most of the time crypto is seen as a trading asset, so probably align it with share trading, securities trading, for example.
Yeah, got it. Michael, you want to add?
Yeah, actually, quite agree with Eddie. So that's for taxations. That's definitely pros and cons. Because if you didn't set up a right taxation rate, actually the crypto business will go to other jurisdictions or other countries. But I think, like from our perspective, for the taxations, it actually need to align with their current financial market structures. Say, for example, as you consider crypto, if that's one of the asset class, so you can charge the capital gain from them. But does it align with other asset class in your jurisdiction, in your market? And also, does it align with your current development, industry development? Say, for example, if you want to push to the mass market for the crypto tradings, of course, definitely you need to provide some subsidy or like the taxation discount on this particular industry with certain period of time to align with your development and also your strategy planning on the crypto business.
And now I also would love to hear you.
Yeah, I think similar to Eddie, right? The reason why MetaPlanet is doing so well in Japan is one of the reasons is tax issues, right? So you buy the MetaPlanet stocks, it's actually much more accessible than trying to buy crypto and then you get taxed on the capital gains. Another example I might give is maybe in India where they tax based on each trade and then they don't net off profit. So let's say you earn like $100 and then you lose $1,000 somewhere else, they actually still tax you only 100, right? So yeah, many different countries have different tax laws, but I don't know, the simplest way for me, just follow what you do in the stock market first, right?
Yeah, and follow up with that as well. So because like it's require a lot of like stakeholder and parties to join in with this. And for Arwin, like because you work with a lot of protocols and projects, do you see that they have any role in helping users to comply through the tools like reporting to or traceability feature or wallet integration to make that problem, like, they make $100 and they lost $1,000. Do you like the protocol can do something to support that?
Yeah, so in BitGo, we built a robust policy engine that's first, and also reports. Because we are regulated in so many different jurisdictions, most of our clients are actually licensed funds, licensed VCs, family offices, that they need the report to send to the tax authorities once and to send to the regulators. So they can use like other custodians as well, right? But for us, we pride ourselves as staking reports, we do it well, transaction reports, transaction monitoring. All these, if you want weekly, quarterly, annual reports, we can help you generate it off the bat, right? That's one thing. And maybe more in the Web3 world, right? Why some projects use us is because they are invested by these large VCs like A16Z, Dragonfly. And then when they invest in the projects, before they TGE, they will actually tell the project, which custodian are you using, right? Because once they TGE, we would like you to allow BitGo to hold your locked tokens, and then we can hold it within their custody. It's a lot simpler, and they prefer it rather than holding it maybe in their own hot wallets, like MetaMask, all this. It's good for retail, but for an institutional perspective, might not be that good operationally.
And also, like Eddie, how do you feel about this? Because I think that all the of your portfolio companies are also like working on this as well.
Yes, across our portfolio companies, we have actually invested in companies that have been helping crypto projects, protocols to manage their asset. And at some point, we had an investment in a company that bought a U.S. company doing tax tools as well. Yes, I remember. I mean, I think it's a growing market, and there is a big need for that. So, at the moment, I'm sure. I mean, I don't know all the leaders in this space, right? Specifically, but I'm sure there is a big demand for that, and we should, the market should watch out, because definitely, as you were describing, it's quite challenging to file a tax report for crypto trading, right? So, luckily I'm in a jurisdiction where there is no capital gains, but in other countries it might not be the case. So you need to, probably the US, you need to work a lot to file taxation based on crypto trading. So it's very important that people become familiar with these tools, and that maybe wallets integrate. I don't know. I mean, there are some ways to make it easier for traders and people to just hold and trade assets. Yeah.
All right. And this one I would love to for Michael to answer this. So because when they're talking with blockchain and Web3, we are saying a lot of like anonymous player around, and that leads to really sophisticated attack, the hacks on the exchange or the protocol. And so, do you expect the law enforcement, the government, to step in and like set up an agency for them to like watching all of this? Because when we're talking about like the blockchain attack, this only foundation and protocol have to like find a way to protect the user themselves. Do you see that the government or the law enforcers should like set up some entity to work with that, and how it's going to look like?
I think yes. I mean, regulations or regulators to enforce some policy or like the rules to make sure like the client protection is enough. So, say for example, in HashKey, it's a centralized exchange, and then we have under all the compliance or like the AML requirement from the regulators. But as for the Web3, everyone should know, like, we're always talking about decentralized, but like how to find the balancing between centralized and decentralized. One of the major like core requirement is actually the educations or like the knowledge about the mass market to understand the crypto. Because if the mass market, as you can see, like at the very early beginning, the early stage of crypto tradings, so people actually doesn't know much about the crypto, or maybe like the tokenomics or the mechanism behind. So we need to have like some enforcement, some of the professionals to engage in the rules in order to protect them. But you never know, maybe 5 to 10 years later. So everyone very clear about like all the regulations, all the mechanisms, and also like the cyber attack risks. And then we can ease the regulations and to lean towards to a more decentralized way. Yeah, so it really takes time, and then throughout the landscape and the condition, we can always find the balancing point.
I see. And Alvin, how about you? Like, because you work with a lot of judicial area, so how do you like approach this problem?
Yeah, I think for retail protection, right, it's always the exchanges. So in every country you see, usually the exchange rules would first come out. And for investors' protection, that's why a lot of exchanges globally, they choose BitGo, whether the regulators ask them to use a licensed custodian or not. Why would they come to us? Firstly, is because if you hold assets in cold storage with us, in the US, it's termed as a qualified custodian, right? So we have $250 million of insurance by the Lloyd's of London. Other than that, right, there's a difference between hot and cold wallets, right? Just for example, if you deposit, let's say, 1 ETH into your exchange, usually the exchange will give you a wallet address. That's the hot wallets. And then some countries, like Thailand, they require 90% of the exchange assets to be held in cold custody, right? So every day, 90% have to be in cold. So that's often seen as the safest part, like less chances of being hacked. And of course, if you work with a licensed partner, it's usually gives a better sense of security to your end clients, which is the retail customers. And of course, in crypto, the main difference from TradFi is once you get hacked, and then the hackers send it out to somewhere, they can use Tornado Cash, all this. It's so difficult to track back and to even get the funds back. Obviously, now with all these tools, it's a lot easier compared to the past. But it's not like TradFi, right? You still can track and ask the banks to send it back. Crypto is it's a lot more difficult.
It's gone, it's gone.
It's gone, right?
And Eddie, how do your view about this as well?
Well, maybe people are not aware, but exchanges, I've been working for a long time, and I would say many, many years with law enforcement agencies. I mean, exchanges in general receive a lot of law enforcement agencies' requests because, every time there is a process and they need to recover funds or you need to find out. So they go to exchanges, centralized exchanges, because that's easier for them. I mean, there are different layers. I mean, we're talking about regulations for exchanges. We're talking about regulations for custodians. I agree that education of the market is extremely important. Unfortunately, people are getting problem and they're losing money with absolutely nothing to do with crypto every day, unfortunately, right? Like phishing emails, etc. They send money on the bank account somewhere. So that part, I would say, probably will need its own agency to deal with crypto crime in a way, right? So I'm sure that will come out in most jurisdictions, and so we need a public to be educated so they understand the risks, right? And then we need the enforcement or the agencies to be set up to protect people more efficiently when it comes to crypto.
I see. Yeah, thank you very much for your sharing. So that is really detailed. I would like to take an overview a little bit as well. So that will be this will be the last question for our panels. I would love to ask you how you feel about the landscape of the crypto for the next 6 months or 1 year. Like, how do you feel? Positive, like normal, or like you will see that as more strict for the crypto? And like, how is the regulation landscape going to look like in the near future? Yeah, I would like to start with Michael first.
Maybe you guys can go first. I feel that I always go first.
Yeah, maybe for the next 6 months, similar to Eddie, right? What we have seen in the last maybe 2-3 months, a lot of listed companies are allocating into Bitcoin as treasuries. And not only Bitcoin, we have clients like allocating to Sui, Solana treasuries, even like AI tokens. So that was the trend the last 2 months. I think this trend would continue because we sort of seen an alpha, right? Once they allocate into Bitcoin and Bitcoin prices rise, sort of the Meta Planet approach and what Eddie is doing here. Other than that, it really depends on I don't know, there's some people here in Vietnam at all the side events saying, new alt cycle might be coming. Yeah, so we're not sure, right? But on the regulation side, obviously, in the Genius Act that was passed by Trump, it's a really, it helps boost sort of the crypto ecosystem, right? Because stablecoins is a huge part of what we do, like wherever you trade, right? In DeFi or in CX, the conversion is usually from stablecoin. So I'm pretty positive about the next year ahead.
Yeah. And how about you?
It's actually talking about the stable coins. So, in Hong Kong just 2 days ago, we actually published the consultations on the stablecoin issuings. So I agree with Edwin. So it's actually very bright in terms of the regulated exchange or the parties in the crypto space.
Yeah, I think, so before we talk about the future, if we look at what happened, let's say, over the last year, we have seen something quite interesting. We have seen the US dollar getting stronger across, many currencies around the world for, macro reasons. But at the same time, we have seen Bitcoin getting much stronger, right? So we have today Bitcoin a bit lower today. But anyway, if you look at the prices of the last few weeks, let's say 120 or between 115 and 120,000. This is double of what it has been, for example, at some point last year. And this in an environment where the US dollar has been stronger. So it really, I think, gives a clear signal that this is very positive. Obviously, the American administration has helped a lot in terms of giving more visibility and clarity to of course, regulations and as well some framework so that people and companies can develop in this country. But I think it's a very, very important opportunity, and I would say especially for countries like fast-growing countries like Vietnam, I would say they really need to look at this space and hopefully to invest in this space, both in time and funds, because it's a great opportunity for fast-growing countries to make a difference, because now is a time where you can get that kind of competitive advantage, right? I mean, we have seen competitive advantages before, for example, with the internet, for example, with, 5G, different technologies. And I think crypto is actually more accessible than those. The infrastructure is already there. You just need the internet. You need a society with a good internet penetration, mobile telecom penetration, which is obviously the case for Vietnam, and developers, right, which is obviously the case here. I think you have really all the right ingredients to get to a level that is probably disproportionately high compared to maybe just the demography or the current situation, let's say. I think it will really give a great step up for countries like that. And again, the opportunities are in various sectors, and of course, as we were saying, infrastructure, for example. If countries start to understand the benefits of blockchain and crypto for market infrastructure and for economy in general, I think there are great things to be done. So for me, 6 to 12 months, positive in terms of regulations, positive in terms of price, positive in terms of opportunities for countries who want to take that challenge on.
Yeah. So I think one last thing on top with the accessibility, as what Andy mentioned, is that the people who actually engaging in the crypto trading. So as you can see, I think this half year or starting from last year, end of last year, you see so many traditional financial institutions actually start to engage with the crypto tradings. So this actually gives us a very big backup for the crypto developments, because they are actually, they think crypto is qualified as one of the asset class for them to do the investment. And then they dedicate with the teams to investigate and do the research on it. So based on these and also accessibility and also about the infrastructure which Eric mentions, I think we all, three of us all both agree that there's actually quite a huge upside for the crypto.
Absolutely, also really positive. Yeah, so that's the wrap up for our panel discussion today. I learned a lot from you guys, really, and would love to catch up with you guys like in the near future to see like how is the market gonna take us that far. All right, thank you so much for being with me today, and yeah, see you.
Thank you.
Thank you, thank you.
Thank you so much to our dedicated panelists. And now I would love to invite all of you to stand in front of the table to take some group photos. Once again, thank you so much to all our dedicated panelists. Thank you.